Good morning, guys. How are we all doing? Welcome to the weekend, everybody. Hope you guys have all had a good week. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin on the 4-hour is not looking too bad here. We are looking like we could be putting in a reversal here. Obviously, we do kind of know everything is geopolitically driven at the moment, and then obviously behind that we have the Fed driving things as well. But just from a technical perspective, looking at the charts, this is not looking too bad at all. You could potentially look at like a head and shoulders bearish formation here, but however, if we are obviously to swing failure or wick below what pretty much would be the neckline here, obviously bar this price action here, we are now looking to invalidate the whole formation by basically getting back above what we pretty much $40,000, and then once we get back above $42,000, this area of resistance, we can be looking good obviously then for putting in a higher high relative to here, and then seeing if the market takes us to new all-time highs, or whether we put in that lower high, macro lower high around the somewhere in the $50,000 potentially. But either way, a move from $38,000 to like anywhere up to $58,000 is a pretty substantial move, and there will be lots of profits to be made in that distance. But obviously the downside is pretty clear. We get rejected here, we come back, well, I mean we are basically technically about below it anyway, but yeah, we get rejected here and come down, and then obviously lose these levels, lose this level, and then come all the way down and test the important $30,000 level, which is also a psychological level, along with $40,000, which we are obviously currently struggling with at the moment. But let's have a look at where we are getting driven, and here we have it. What an absolute beautiful close for this week. Last week was an absolute dire close, and it was no surprise. People looked at the chart over the weekend and thought, forget this. But maybe insert another F profanity at the start instead of forget. But yeah, forget this, and then there we had the selling, and obviously what we know happened last week. But obviously now that Biden in the US has pretty much shown that it has no teeth. I mean, we all knew this anyway, but it hadn't like telegraphed it to everybody. But it kind of has done now, and then let's face it, they have got teeth. Let's face it, they have. But the only problem is that they just have rampant inflation at the moment, and they can't really just be knocking up energy prices even more than they already have done with all their ESG bullshit. Rubbish. So yeah, I mean they're just stuck between a rock and a hard place, and then that is basically why what happened, because the weakness was spotted, and they pounced. So but nonetheless, anyway, all that aside, charts wise, this is looking very good. We did get above this horizontal. We were looking at this bull flag here, did get a nice extension to the upside, and now we just need to, into next week, get ourselves back into this nice area around here, and then finally the last real area of well, it's not the last real area of resistance, but the last area to get into. I mean, yeah, to be honest, it will probably be over here. Once we get into this area, we're clearly looking at new all-time highs, but even just getting back up to here will start to make there'll be a lot of confidence back in the market. I mean, what we have got now is the fact that we are probably going to not see those that 50 basis point rate rise from the Fed. March 16th now is probably almost definitely going to be 0.25 basis point, 0.25%, because of the instability and problems this is causing. The irony of the fact that that driving up energy prices, which therefore feeds to higher inflation, which gives people less money, which means the Fed needs to ease. I mean, it just, you don't need me to explain how kind of how from a textbook perspective, and even from what is basically a bull crap perspective textbook of the Keynesians, that is still not what an ideal scenario. That's still not what should be happening. But even though even from a textbook perspective, it's rubbish. That is ultimately what we are seeing here. But at the end of the day, there is so much debt accrued that basically rates just can't go up because of the weight of the debt. That is one of, obviously, the 3Ds of deflationary pressures. Debt, the debt, obviously, which is the one we're talking about, debt, and then obviously demographics and aging population, and then disruptive technologies is also another one, but then also the other one is deglobalization, as well as obviously politically the world sort of fragments, which are all the in fact, ignore that. Deglobalization is inflationary. It was the other one, the technology, basically. So obviously the debt is the main reason why basically rates can never really go up, and why you have that sort of cascading down of the Fed's funds rate over the years. Every time you get a recession, rates down, and then you only recover a certain amount. It's basically like a bouncy ball that's running out of its momentum, it's slowly just gonna flatline. But anyway, enough of the analogies and waffling on there. Apologies for maybe wasting a few minutes of your guys' time this morning. None of that. Anyway, people are going to look at this over this weekend and be like, this is looking good. So notwithstanding anything crazy happening over in the Ukraine, which I don't expect it is. I mean, what you've got to realize is that there will be a lot of propaganda, a lot of stuff, a lot of oh, the Ukraine's doing really well fighting back. Russia's so bad they're going to try and take over other countries as well. I mean, Russia is not going to try and take over other countries. Ukraine people, fighters, are not doing that well at all. That's just propaganda. That's just to boost morale. That is just it. That is just the first casualty of war is the truth. And obviously there you go. the truth is dead. So yeah, there you go. But this is looking good. And what I would say, just go look at the stock markets to kind of know the markets are kind of looking at it and thinking, this is pretty much done and dusted now. Obviously something could happen. But obviously I personally think it's very unlikely. Extremely unlikely. I mean, all objectives are pretty much been met, ignoring what the, obviously, as we know, heavily biased mainstream media is going to tell you. Anyway, so let's look at gold as well, just to confirm our view. Gold back actually below all this previous price action here. So I mean, if I was Peter Schiff, I would be worried about a smash all the way back down into the 1700 handle, obviously handle, not 1700 handle. But I mean, like I have said, we could be looking at a higher value relationship established, and obviously the top side of that, the top side of the previous one, and what would be the lower side of a high value relationship for me would be 1840. So if you maintain above 1840, then I think we can have maybe a new range between, say, 1840 and 1920, even roughly where we've got up to now. Maybe we just trace sideways from here for a bit. Oil as well, also, if you find it, here we go, obviously down a bit as well, but we do know all the structural bullish factors for oil. But there is going to be a lot of froth that can come out of this, and I wouldn't personally be surprised to see us come easily down to about $80. Which will clearly be good for the markets. Both from just reducing of just inflation, basically, and just general costs and everything, and sentiment as well, and people's and consumer confidence, and their spending, the amount of money they've got to spend as well. That will be a big benefit. DXY obviously coming down a little bit as well, back into our range. I mean, obviously we know what this was, so I do expect us, again, like when we were below, kind of expect us to probably just maintain this range until something starts to really break somewhere. or we start to really recover and go in a risk on, in which case it can potentially come down. But yeah, this range basically mid 95s to 90s, well, under 97, so let's say mid 96s. That kind of seems to be where the dollar wants to reside for the time being. 10-year yield, good to see that is still under 2%, because like I said, this is going to break stuff up here. This cannot make a move up from here. This has to come down, and this is, I personally think, is more likely to come down, especially once when the oil inflation abates. Potentially it may not, but I mean, the next month's figure may still be a bad figure because it's for the prior month. And then the month now, because of the energy price spike, is maybe then we're going to get maybe another 2 months of bad figures, and then they can't maintain the upward trajectory just based on obviously the year-on-year comparables, i.e. the base effects. It's got to come down. So there's that. What else do we want to have a look at? Oh yeah, Ethereum. Hey, let's look at some crypto. Ethereum Satoshi pairing, looking like it's trying to make a move here, but obviously clearly we know we're in a bit more of a risk on environment now, or just a less risk off. We just extend this along. We are currently messing around with this horizontal. Get back above this horizontal will obviously be good, and then we'll be looking at trying to take out this area to then get into what will be our very bullish area for looking for new nice moves onwards and upwards. We'll just extend this along a bit as well, because obviously we're hoping this comes into play. We get up to here and break above. The USD pairing also at a resistance area here. Did basically obviously hold this level here, and yeah, resistance level here, ran into a 409, but yeah, easing off that. But we want this to bull flag. Once we get through here, once we get back above 2,900, I think this will look good. Don't forget, we've got ETH 2.0, obviously, whilst we've been distracted with all the other fun stuff going on in the world, ETH 2.0 just has to be creeping closer. So yeah, we have that. So we could eventually see this that narrative start to come into play, and then Ethereum start to really catch a bid, even obviously against Bitcoin. So yeah, Bitcoin dominance coming down a bit here, as we can see. I mean, what we want is to lose this area here, but at the moment we're above it, so obviously not looking amazing. But if we zoom out, we've obviously got a series of lower highs. Well, providing this is a lower high, we don't continue upwards, but even still, continue upwards, it's got a lot of room to put in a lower high before it gets above here. And yeah, you can. This does look bearish. This does not look bullish. This does not. There is no argument for this looking bullish. There's no argument. There is no argument. So yeah, there we go. And obviously that is good. That is obviously, if it does come below, that is good. Obviously that would imply Bitcoin is going up. It would be unlikely for this to come break down whilst Bitcoin is coming down, but it would imply high price for Bitcoin, and obviously even more capital pumping into alt. So alt season, is that what that would imply if that is to happen, which on the chart looks like it has a good shot. So there you go. Let's have a look at stochastics now. They have to be looking good. 4 hour obviously getting, not obviously, but 4 hour getting a little bit tired. This is obviously a short time frame. We've had a pretty aggressive move. 10 hour still got still got room to run. Very upward pointing in the bullish area, so support from there. 12 hour great as well, just entering the bullish area, and lots of room to run. Daily turning back up from a low level. 2 day is still coming down, so 2 day coming down. 3 day has turned back over. 5 day is still pointing up. Weekly obviously looking quite good here. Not looking quite good, but has turned up, has reset this up. Well, I say it's not a reset because the price actions come down, but has it's reset itself, so now it can have a move to the upside. And obviously bi-weekly and monthly pointing down, but bi-weekly, as you can see, kind of losing that kink a bit. Does look like this could at some point in the next few weeks, couple of weeks, month or so, turn up if we are to start to make progress above $40,000 plus. So yeah, all in all, can we put in a reversal here? Potentially. Could we be looking at this as obviously a lower a lower high relative to sorry, higher low relative to this low here, and then could be looking at then obviously, well, basically a higher high relative to this high here, which would obviously imply new all-time highs. And I mean, we've got to be looking around the 80 to $90,000 handle if that is to be the case. So yeah, all to play for. We are still obviously obviously have a fluid situation in Europe, but like I said, I think a lot of what you may hear will be scaremongering. I think we are through the worst of it, as the market is kind of looking like it is sniffed out, but we shall have to see how it plays out, because clearly we can be thrown some more curveballs, clearly. But it does seem like the US has pretty much stated its stance on it, with basically they're not going to do much. We've got like silly people like the UK banning Russian planes from British airspace, and telling Chelsea Football Club managers that they're not allowed in the country no more. All that cool stuff, but that's just a sideshow. That's all that is. So yeah, there we go, guys. Remember, this is not financial advice. I'm not a financial advisor. I hope you guys have all got a fantastic weekend planned. Always do your own research, and I shall speak to you guys soon.